Okay, for the second round, I mean the fourth round, third round, I'm losing track. Okay,
Third round.
third round. Okay, so I was just going to look at the 15-minute,
Okay.
but let me go back so you can see the difference. So if you hit auto, so we already, let me make sure that I have this right because I think I will put this zone more like right there. And then I'm going to explain to you why those areas. And I think that is good right there. Could even been this one.
I can't see it.
You can see nothing?
Just a video.
Oh, okay.
Okay, now I can see it.
Okay, so remember we said we're going to look on the daily.
Mm-hmm.
And then by looking at the daily, I like to draw the zones in the color of the highest probability. In this case, based on the action that took place here, we are going to call this one an area of supply because liquidity is provided to bring the market to the downside. So I like to paint this in red to have a visualization that they should go down. Now,
Let me ask you a question.
yeah,
Why did you make the paint box that width? Couldn't you shrink it down a little bit more?
good question. This is why. So when you look at the price action, let me put another color. Okay, so you see this, let's just pretend this is a candle, right?
Okay. Mm-hmm.
And it's a black candle. And the
Mm-hmm.
way I draw the candles is that black goes down, white goes up. And so price opens here
Mm-hmm.
and immediately price goes down until here. Then here in this level, buyers comes in and I'm gonna paint it not white because you won't be able to see it. I'm gonna paint it green. If you were to see another candle, then price goes up like this. And if those candles were being drawn perfectly, then without wigs, wigs are those sticking tails that comes up. And what those tails mean is that right here, price came down, but then it pushed. Buyers pushed. Open this one, price came down, buyers pushed back again,
Mm-hmm.
right? So when you have the wigs forming those areas, that is telling you that that is an area, wig here, this whole indecision here, wig here, and this whole wig. That tells you that this whole section is going to be interaction of up and down. And in the lower time frame, the up and down is going to look like opportunities to trade like this with higher highs and lower lows. So I'm drawing this thick of a area because when you go into, by the way, I will do it like this. I'll draw the area and then I draw the exact resistant line, which is going to be here, right here. And I'm not going to do it at the top of that candle. I'm going to do it in between those two wicks. Right there. And then let me make it a little thicker so we can see it, and let me lock that. Now, let me zoom that in. Okay, so let me move this a little lower. And you can do a couple of things here, right there. Or you can also do this, and then right there, at the top of these two. And now you know the potential for this candle based on the structure is for price to go. Right now we are at the 47, 40 and 3/4. And you might see another 20 ticks at 60 even before price comes back down.
Okay.
But I'm leaving this one, and this is what? 60. This is 65.25 as a buffer that it could also push through and get to that level. And so when you look on the daily, yes, you're looking at that, but if you look on the 15, look how that looks, and it gives you a very clear target or potential target to where you know price, it's already in this red area that we saw in the daily, and you already know that this is an area where, based on that pattern that I show you, the head and shoulder, at one point you're looking for wicks, just like I explained to you, they start developing here in a way that is going to show you a drop.
Okay.
But
if
right
I'm looking
now,
at the 15, based on where I have my the two red arrows up there, based on the 15, it looks like it's not gonna reach that at all, right? Or am I looking at that wrong?
It could. Look, right here, it's trying to break the top of this wick. What it could possibly happen is this. Of course, it will have to, it could happen if it was news driven for it to just go all this high in one candle. But typically what you see happening is something like right here, it drops and it finds the next level, which is the top. You see how these are the levels?
Yeah.
It'll find this level. Maybe this one is a weak level, so it keeps going to this one here. And then from here, it bounds, and then you have another push until it gets there. Okay, so that's why we look at the levels and how price is behaving. And we're doing that because we eat, 10, 20 ticks per movement. We're not looking for 500 ticks in one trade. We're looking to buy possibly here or possibly here, and we highlight those support areas. So when the price gets here, we look at, like right now, just to give you how this practical way. So this is the 2330. So I can come here.
That's 2930. I was gonna say you said 23. Okay.
29.30. Look all the ticks down that is.
Oh, it's all the way down there.
Right here. Right? And so I can just 23.30, where is it? Oh, I lost it right here. Boop, and I put a limit order right there.
Mm-hmm.
So when the price gets here, you'll buy my order,
Mm-hmm.
and I'm hoping that it does this. Now
Oh.
I look how
But
fast
wouldn't you
this.
put a buy at 29.30 and then another buy at
Oh, this is 33,
29.20?
by the way. So it's not
Oh.
33. It is 30, which is here. Yeah, go ahead. I'm listening. Say that again.
Wouldn't you buy at a level at 29.30 and then put another buy at a level at 29.20? Do that both at the same time.
Like one at 30 and one where? Like right here.
29.20 because you have your other level there.
Oh, I see. Yeah, you can do that.
Uh-huh.
Yeah, you can do that. That's not a
Oh
problem.
God, that's all the way down there.
It is really low.
Oh, I
So,
didn't realize that it was that low looking at the dome.
so it might take a while. Look at where the
Yeah,
price is right now.
yeah, it would take a while.
So if you are position trading, and that's how they place orders. That's why we expect the market to react at some place. For example,
Mm-hmm.
we go up here. Let's go back to our 4 hours. Let me delete all this coloring.
So let me ask you a question. So when it says like 15 minutes, an hour, 30 minutes, an hour, and 4 hours, based on the charts that you have there, the market reacts like that every 15 minutes or 30 minutes or hour, 4 hours?
Yes, always.
You're serious? So you're trying to tell me, like say for example, if I wake up at 7:30, right?
Yeah.
And then I did my 4 hours.
Right here. Yep.
Right
And you
here.
mark this line right here.
Yeah. I marked my line. So I would expect in 4 hours, it would be, I don't know what it would be, but it would do like the same, we call it what, an N? The same pattern?
It would, yep.
Are you
90%,
serious?
90%, that's what's going to happen. Yep.
Oh, wow.
That's why it's called technical analysis, because you're analyzing the market based on previous levels, previous behavior. And in this case, I can almost guarantee you, look
Mm-hmm.
at this. You see this candle right here? Look how
Yeah.
clear it went and then dropped. You saw that?
Mm-hmm.
That is the top of this. So that is 29.6525.
Mm-hmm.
So what position traders, let me close this. I will look for that number, 29,
I think you said 29.65.
66, 66 and a quarter. Let's go for 66 and a quarter. And you know, when you're swing trading, you don't have to worry to be exact to the tick.
Mm-hmm.
So 66 and a quarter. You may want to put a 6,600 because it may not get to the quarter. And you put a sell order. And in this case, these are my take profits. As a swing, these are my take profits because I do day trading. But as a swing trader, if I'm gonna sell here, my next level of interest will probably be at 29.20. So I will delete this order, and then this one, I'm gonna drop my take profit, and I'm gonna look for that level. And I wanna show you on the other chart how that looks. Look at this. I mean, if you are able to do that move, you make so much money. And we're going to 20s because we're going, hypothetically speaking, we are going to let the market do our thing. Wow, this is a huge move right there. Pagata. So you're just placed on sell order here and a buy order here. I'm sorry, here. But the buy order is what will close your sell. Remember, it's the round trip. All right. Now let me show you this on my chart right here. You see the sell order right here?
Oh, okay. So you moved it over from the dome. Okay.
29. Yeah, because what you put on the dome, you can see it on the charts from our broker.
Oh, okay.
So like if I go here, it will be in every chart. And then these are my stop loss. So if the price breaks here, so if the price gets here and it doesn't stop but keeps going, when it gets here, the positions will close with a loss, but it's to prevent the market to really go all the way up and then lose more money. But based on the statistical probabilities of reaching this level, based just on this level, how it was rejected with this candle, and then look at the massive drop, what it's telling you psychologically, Diana, is that once the price got here, the selling pressure was so intense that put all this push down until the market was dropped all the way here. So if the market dropped all the way here, what do you think are the possibilities to hit here and just drop to here? That's nothing compared to this drop.
So let me ask you a question. So you know how you said sometimes you trade an hour or two a day? So is that why, because you're using the charts, you're not constantly like looking at, well, I don't know, your phone or something or on the computer to see the prices, because you basically, you can manage it off of the predictable charts on what?
Yes.
Oh, okay.
Hold on the talk 1 second that somebody came in. Let me see who's there.
Okay.
For Sunday night.
That you'd need to see.
Okay. So for people that trade, because remember, each of these candles are 4 hours. So for the price to get from here to here, it's not going to be in 4 hours. It might take 8 hours or 12 hours. So when you open that position, you open it up and then you let it reach your target. And you can do that when you understand market structure. Does that make sense?
That makes sense.
Okay, so, and then you saw how it looks here. By the way, if you want to know how much money that will be, just so you can calculate, let me do this. Here is easier to calculate when you do such a big move because you can shrink it. And you see here is the entry, the red line. Here is the exit, the green line. I have a calculator that tells me how many ticks is that and how much money would that be. Like you can see, I have everything set up for 3 contracts. So
Where's the
based on,
calculator?
I'll show you in a minute. Chart calculator.
Or are you talking about your own regular calculator?
No, the actual graph.
Oh.
If you put here,
I don't see it.
yeah, I put it in the wrong spot. Let me put it right here. So that it's moving this. It's moving the line. I don't want it to move the line. Let me put it close enough, not that close. Because if I put it close, okay. So we go there all the way to the green line. In 4 hours, 3 contracts. That will be just one trade in about 8 to 12 hours. You made $6,112 in 6 hours. I mean, in 8 to 12 hours, approximately.
Okay, Luis, I think I'm confused. Let me tell you why.
Yeah, sure.
So the ticks are $12.50.
Yeah.
One contract is 4 ticks, right?
Yes.
So if you have one contract is 4 ticks, if I have 3 contracts, that's 12.
No.
No, okay, hold on. 1 equals to 4, 3 equals to 24.
No. Do the math. 1250 times 3.
Okay, so that's 15. Okay, 5, 6. Oh, 46 and a half.
3750 or 3775. How much do you get?
437. No, you said 1250 times 3, right?
Yeah.
Yeah.
12 times 3, 36. $1.50, 37.50.
No, I got that. Okay. All right. So 3750.
All right, because you have 3 contracts.
Oh, because I have 3 contracts, so that's 37. That's 3750. Contract. No, takes.
Tick values, because you have 3 contracts. Each one of them is worth 1250.
1250.
So you have 37.5 per tick that it moves. In your favor or against your favor.
Okay. I'm just like confused. How did we get to like 6,000 there?
So,
God.
well, let me show you here. Again, calculator, just so you can see why. Let's just pretend it was here. Let me delete this.
Oh, look, it puts it right there. It says 3750. Okay.
Right. And this is how many ticks? Look at the number here.
It says -1.
So 1 tick, 3750.
Okay.
If I go from, oh my goodness, it keeps dragging these lines. If I go from there all the way here, how many ticks is that?
Is that 151?
Yeah, 144 ticks.
144 ticks. Yeah.
Times 3750 each tick, $55,400.
5,400? Oh. Okay.
Because you have 3 contracts.
Okay.
Now look at this. If you have deep pockets to risk more, and you put 8 contracts, that same move was $14,400.
Oh, wow. Okay.
with 8 contracts.
Mm-hmm.
14,000 bucks
Okay.
in just a few hours.
Okay.
But that is because you're selling the market and the market goes your way, right?
Yeah.
How about if you go against you?
I guess you'd be losing the same amount.
Then you have negative 12,000 if you close your position halfway through or you close it somewhere here.
So the way to do it with futures, like because you're trading, you doing day trading like that. So
Yeah.
like if you did lose for example, let's just say $500, they take the money out of your account right there and then. Is that how it works?
Immediately.
Oh, okay. So you
The
don't have to
minute you,
like wait for the day to cycle. They just take it right there.
oh, there is no cycle here. You bam, boom, gone.
That's funny. Okay.
It's really, I mean, you close that position and that money is gone.
Oh wow.
If you leave it open, then it's on paper. But then if you risk too much, you might just keep growing your loss. Or, that's why I trade with a small margin for
Amount.
error.
Mm-hmm.
When I typically trade 3 contracts, I try not to lose. My stop loss is set at $150. So I'm risking $150.
Oh, that's a good idea.
So
Okay.
if I lose $150, if I enter wrong, I lose $150. But if I enter right, I might make $700, $800. It's a good win. It's a good risk to win reward ratio because you're
But then how
risking.
come, like on the thing you sent us the other day?
Yeah.
Hold on. For the week, I think you had like was it like 30? No, was it 4,100 or 3,100? I can't remember.
It was 7,000 total amount generated with the strategy.
Mm-hmm.
So at one point, the curve and the peak of it for profit was 7,000.
Mm-hmm.
But along the way, the 7,000, once I got there, I lost 4,000. But I still kept 3,000.
What happened to your 150 cap?
Well, I don't know if you noticed, there were 103 trades.
Oh, I didn't look at that. Okay.
103 trades, 100 trades in a week. That's a lot of trades.
Okay.
And so, a lot of trade you make per trade. Actually, my ratios are that I make an average on a trade between $300 to $400 per trade.
Per trade. Okay.
Which if I'm risking 150 and I make 350, I'm already making more than what I'm risking. So if you trade $150 and you make 350, it will take 2 losses to wipe everything out.
Everything out. Okay.
Because on the next one, you're gonna risk 150, but you already have 300.
Right.
So if you made one wrong trade, the 300, now you are at 150. You make another bad trade, then you're back at 0. But if you make a good trade, you made 300. Bad trade, 150, now you're back to 150. Another good trade, now it's not 300 that you have, now you have 450.
Okay.
And at the end of the week, 103 trades I did that week. At the end of the whole week, that was the total that was revolving between profit and losses and net profit, how much went in and how much went out.
Okay. That makes sense.
All right. So what else? Let's finish up with understanding market structure. So another part of market structure is the market moves on higher highs, lower highs, and when you uptrending. When you are downtrending, is lower highs, higher lows. And then when you are in range, those are the three types of market structures: uptrend, downtrend, and a range. Okay? And so, and it will look something like this.
Okay.
If you are uptrending, high, this is right here, a higher high. Drops, is still from here, this still high, right? It's higher, but we call this one a higher low. This is a higher high. Now, notice something. You see why this is, when you do this long enough, it becomes so easy. Because all you gotta do is look for this. Look at the level. See that? When they came down, price bounced, and I have such a crooked bounce in this level. That's why I painted the other levels before. But now another thing is, look at this. This is one, right?
Oh, okay, so I didn't see the mouse. Okay.
All the way at the top. So we're expecting two to be here, right? Why are we expecting that and then dropped? Look what it did here. One, and then drop. And the market does this over and over when you get to these type of levels. And why it didn't do it here? Well, it did. You were asking, it just didn't drop this much, but it did. Look at this level. The market came up here, same level, and it dropped only a little bit. Do you see that?
Yeah.
Came up here, it came again, and it dropped only a little bit. Louis, why is not dropping as much as here? Because here is making new highs. So the movement that you see here and then here, now it begins to be more erratic. It looks similar to this drop and then here and then drop. But in chart patterns, this is a very reliable pattern to trade for this type of move. This is called, and you can write this one down, a double top.
Double top.
Okay, that is a double top. Right here. And so double tops or double bottoms, they have a very high rate of success. So guess what's going to happen here? Top number one, and it's a double top. And so, Louis, how can you say that? Well, because if you look at the charts over and over and over and over, and you go back, they always do the same. Because markets are fractal by nature, and we're going to learn about fractals later, which the thesis of fractal really explains that the markets move through the path of least resistance. When you have resistance, it blocks and it goes away until it finds another way. And so whenever you hit a level the first time, and then you hit it the second time, this is still strong enough for this to bounce back down. That is the theory, and that's what's expected. Why? Because everybody in the world that understands this, all the pros, they know this, and they place their sell orders here. That's why you place your sell order with them, so that you follow what they're doing. Now look at this. If you see this is a double, first hit right here, right? Now let me show you this. Was that really the first time that it got hit? That level. I'm gonna try to squeeze them all here so you can see. Boom, right there. Look at the top right here. You see that right here? My mouse is right there.
At the 20, where are you? At the 29.64.
The 66 and a quarter.
66 and a quarter. Okay.
That's right here when the market hit that level and then it dropped, right? You see it on my mouse?
Yep.
Look what happened at the same level right here. Market went up 66 and a quarter. It dropped. It was a little bit more pressure. It went up again until it gave up. And then look what happened. It dropped, pushed, and then it dropped. So why do you knew it was going to do that here? Because it already did it here. And it did it here. So we have a 1 and we have a 2. Now here, this is why I painted this whole area. Because here you have another point, and that makes that entry that we just did, assuming the 66 and a quarter, a little riskier right here. Let me delete those colors. Right here, because this level is at 3,000, which is between 2980s and 3,000. So if you want to play this even safer, I would place it here if it was a swing trader. But if you put it on the 3,000, look when it got to 3,000, look at this big drop. So here it's expected to do something similar. Could it do it here or could it go here? Those are very two possibilities. As you can see, look how it keeps coming up. You see how it's going to take some time, but it's there. It's almost there now. And so we know that once it gets here, it's going to get interesting because a big drop is going to come. It formed a double top from this time frame and this block, but it's also a triple because it hit it right there. And in fact, that whole area here pushed back and then it went up, it broke, and then it went back down. So are you following this? Kind of understanding?
I lost it when you said the triple. I didn't see the triple there. I
Well,
saw.
this, right, because remember this price action here, price went down, and then here, that was a top, and it couldn't break this level. So we can consider this one to be 1. This one 2.
Okay, I was looking at this side of the screen. I didn't go back to the other side. Okay.
Yeah. And this one 3. Now, that's why I said the take profit if you're shorting right here. Because if you look at this from a bigger perspective, and I'm not want to get my head of myself, but this is a triangle right here. So that means that when the price gets here, there's going to be pressure to break through to this area.
To this area.
For those breakout traders. But if you notice what I told Ruben at the beginning, and I said it clearly, that this area is a dangerous area because anything can happen. And in trading, anytime, anything can happen. But when you are in these type of areas where you had this type of action in the past, if you look at the bigger scale, you look at the N wave says that it should go down big time, but you're forming a triangle. So you have multiple scenarios that can go either way. So it is a riskier trade to take any positions at that level on a long-term basis. But if you want to take the risk, you'll definitely take it on the short side, but don't expect to go all the way down. You just sell it because it will sell a little bit, at least enough for you to make some good profit until at least comes to this level right here.
Okay.
All right, so we said just now that market structure is uptrending, downtrending, and a range. And the way you know where you are is by the formations of high and highs, low and lows, and then vice versa, low highs, lower lows. Right here, let's put it from here. The base. And I'm gonna take all this in consideration as a high, right? This is the lowest, then high. Then this area, we're gonna call it higher low. Why? Because it's the lowest, but it's the highest from the low, but it's low from the high. And so it does this, and then here, bound. Is this level higher than this level?
Yeah.
So we call that a higher high.
Okay.
And then is this level higher but lower than this, but it's higher than this?
Yeah.
Yes. So we call that higher low. Every time you see this type of formation, you know your trades to be on the safe side are going to be long from the supports, which are this area. You put your long trade and you go all the way up here and you got a higher high, higher low. Now, let me tell you a tip. When they are so wide open like this all the way up, and then it's safe to buy. The minute that they start getting this tight, you see how they're all clustered up here. Now look at this higher high. It's not that much higher then it becomes riskier, because what is that telling you, Dina, when you look at the psychology, understanding that these are participants in the market? Look at this higher high, it was almost right there at the same level. What this tells you that is happening in the market?
Is that where you would say there's a lot of fear, people getting in and getting right back out?
That's where you say that the greed is not bold enough, because they're not pushing the market higher, at least for the time being. And so, look what happened. Here you have another stretch. But this stretch, it took a very long dump before it got to this high.
Yeah.
And so this right here is a signal. Look how you have a higher low, higher low, higher low, higher low, and all of a sudden we have a lower high. Because this one was lower than this.
Lower than that one.
That right here, look how different it was. This is a flag, a red flag. Wait a minute. It looks like buyers are beginning to relax. They're still in control, because look at the push from there. But now you got the first signal that they couldn't do it. Now, that happens from time to time, and it did happen here. And look what happened. You did another higher low. But in there, you have a higher high. But check it out. Was this a higher high?
No.
No, because it didn't broke this higher high. So this is a lower high.
Lower high.
And by the way, this was not a lower high. This is a lower low. This is a lower high. Now we have, so when you start getting mixed signals, low, low, higher, high, and all of a sudden higher low, but then you have a lower high, it's just telling you that price action is beginning to start going into indecision. Which way do we go? Because it's not clear anymore that buyers are pushing. Now buyers push, sellers push, buyer push. And why that's happening? Because all these professional guys, all these traders, they know they're coming to this area of interest. And so they know that to break through here is going to require a big bull. And it's going to require to tear down all the bears clustered up here with all their hundreds of orders to sell the market. So they stop doing the aggression that you saw here with these big rallies. That is market structure that you begin to understand on a 4-hour chart or a daily chart as you're gonna enter your trade, how to trade in the direction that the market is going. Okay, now let me show you the opposite, and we're gonna finish with, I think we're gonna do, so we started at 5, but then I took the 30-minute, so we'll finish at 10. So let me do this. By the way, look how the bulls are pushing, and we might be able to see what happens in this level. Look how, you see how far it was? Look where it is, almost there.
Huh.
Remember the N wave I told you?
Yeah.
Look at it here in a shorter time frame because they all repeats themselves in all time frames.
Yeah.
Look at it from here, first leg. Look at that.
Yeah.
Almost identical, the same
Almost.
size.
Yeah.
So if you do the N wave, you know that if this thing stretches all the way here, is that it no longer looks like an N.
Mm-hmm.
Now this is too long, which is a confirmation for you to put your short order to sell the market at this level because this is getting overextended. That's when you hear the word the rally is overextended, is that it's going beyond where it's supposed to be based on the waves of the market.
Mm-hmm.
And so that gives you assurance that the possibilities on this rally before a drop to get here is very hard because from here to here it will be way too long.
Okay.
The market gets tired. So that's there. I go there, and then I want to show you the lower lows, which is on a downtrend. Look at this. And colored. So here we have a higher high. And then the market comes here. This is the level.
Mm-hmm.
A higher low. I'm sorry. A lower low. Because it went lower than this. And actually, no, that's not it. It is a level, but the lower high, shorter lower low will be right here. Because you see how the market, this was a higher low, and then it broke that level, and then here it bounced, creating a lower low.
Mm-hmm.
Now this becomes a lower high, because it's not going higher than this level. It drops to here with another lower low. And the next move up did not break the lower high. So this is another lower high. So when you start seeing these movements, you know your bias is going to be to short the market. So if you're going to buy a stock, because all the markets do the same thing, if you're going to buy a stock, when you see that it's doing this, then you know you got to be careful where you buy because it is doing lower lows and lower highs. Okay? And the chances of you getting burned, if you buy here thinking that it's going to go up, you lost your money. And so you see that it does that. Look what it did now. It came down here, lower low again, lower high. It's still this next level is lower than this, but it's higher than this. And then it dropped another lower low. And then it came up here, lower high. And then it drops again. But check it out. Remember what I told you here? Look how separated, look how much apart they are here. You see that?
Suddenly short, yeah.
But now look at this lower low, it's closer to this. Look at this lower low, it's closer to this. And look at here.
Yeah, you don't have time to breathe.
There is no time to breathe, so you know the steam for this drop is beginning to fade. And look at the the lower highs. And then another one here. And so this level right here becomes the decision-making factor for an uptrend when it breaks this level. And now we have a lower low, but all of a sudden it broke this lower high, it broke this lower high, and here you have a higher low again. And not only you had a higher low, what can you see there based upon what I just told you in charge pattern? What's happening here? If you were in the market looking at going up and you are here and it's going up like we're looking right here, look at this level, market structure. Look at the same level. You see that? And look what happened.
It tanked. It went to lower.
Exactly. So this is advanced because if you've seen that it's breaking up at the beginning, you might get a little confused and you just want to buy the markets here. It's safer. But if you know that this is a double top.
Double top, yeah.
Look at the formation.
Yeah. And
right? That's what we're having right here. Double top. But this is a wider one. But it's the same thing.
Yeah. Okay.
But also remember how I told you that this actually was number 2, but number 1 was here? Look at number 2, but number 1 is here.
Makes sense.
So this is 3.
Yeah.
And so if you are experienced, you put your short order, you make money on the way down, but you know your target is here. Just like I told you, my target will be right here because I know this level is going to, remember, all this is going to work as a support. And look how it did it perfectly. So you put your buy order and you know that you have a lower low, a higher high.
A higher high.
You have a lower low, higher high, lower
high.
Yes. And so it does the same thing. And the markets do that over and over and all the time. Every market, they do the same thing. So this is why we start trading with understanding the structure.
Okay.
Okay. Now, the market does this. The market goes like this, right? How do you call this?
The end. Oh, high.
How do you call this?
That's high, low. Low, high. That's what it means. And high. And then you get your double top.
Right. Now, if it's going down, it's the same thing, right? And then you have this.
High.
These are
the double top.
Right? Okay. Now, the next one and last one of the situation is a range.
Okay.
When the market is not going anywhere, but it's just ranging. And
well, wouldn't you just consider that high, low too?
No, because it's not making new highs. It's not making new lows.
Oh, they all kind of like level. Okay.
They're all kind of like levels right there. So it's a range trade.
Okay.
And you can trade it when you know that when it hits here, the minute it hits again, what's going to do?
It's
going to drop.
Yeah.
When it hits here, what's going to do? It's going to go up. Now, you do this with experience, because if you enter this in the wrong time, then it might just keep going down and then you lose your money. But once you know how to read volumes and you know how to read this ups, then you can come in and start trading ranges, because you can make a trade here, get out, trade here, get out. You are more like a hobby, you said it, you're more like a swing trader, so you may not be doing those type of trades, but I do want to show you so you can identify them when you look at a chart. Now,
So
yeah, go ahead.
you said, because you remember you said this with Ruben, and then you said it again. You said with the volume. Where am I looking at to look at the volume? Because when I'm looking at the pricing. Where's the volume piece that you talked about?
You're gonna see it in another class.
Oh, okay, okay.
Because the way I designed the training is to build upon every one of the elements and parts of trading. So right now, once you focus and your mind is cleared, then you get this really down packed, then we add on something else. Then we add on something else until everything comes together.
Okay.
Okay, but I can show you real quick. One of the volumes are these right here. And you can see buying volume. So I am pretty sure that it's going to try to break the level. But I don't want to derail now, especially I really want to show you the range and then call it for the day. We have 7 more minutes before 10. Where do I find a range? Typically ranges are in all time frames, but because remember, price is moving in fractal basics, but it's also doing, let me delete this for now, so I can show you a range here. Look at this. To trade the range, we trade them. Let me make sure I'm on track with the, yeah, so the box. Okay, so I'm illustrating the box right here. And then I'm gonna show you this. I can come back here. Okay. You see that range?
Mm-hmm. But it's not like all level. Like, remember the other one you drew? It was like up and down, and they're like level at the same. So you started to level, and then right when you get right there, well, you can't see it, but right when you get like further out, it kind of like it took off to, it went higher. So it's not like the other one you had.
Look, check, well, that's what is called a breakout, but check it out. The market enter here. This, remember what we said, a fake out trade. It's a false breakout. Because shorter term frame traders, they don't look, I mean, we do for the structure, but on the actual trading, this is my favorite chart, 15 minutes. So if I'm looking at this price movement and I see that it break out of this level, that's why we don't take it like that blindly, because it goes out and then comes back down. But what you do is you wait. Once the range begins to form, now you have these up, then it comes down at this level. Look how price reacted, and it went back up here. Now went back down where? The same level. And it come up to the same level. So if you were scalping, now here is another false breakout, you see? And rookies, people who are just starting to trade, they see this price going down and then they start selling only to get, this is what we also call, in this case, that is a bear trap. Because all the bears that short the market got trapped when it went back up. And then look
but I thought when it's falling, you go with the knife.
Yeah, but not when it's breaking out of a range. Only when you have a defined downtrend. When you have a defined downtrend, or if you're trading a range you will not go with the knife at the bottom, you go with the knife from the top. And so the top will be, once you know this level and
Yeah.
price went up here, here is where you sell. And you sell it, it breaks, and the minute it comes back, you close it and you make the profit from here to here. Because this is really not a knife. A knife is a downtrade. This is just simply a range move with two false breakouts. Here,
Because it's 15 minutes.
that is 15 minutes. It can also happen on higher time frames. It's just that on the smaller time frames, it happens more often because there is more chance for price fluctuation. On the bigger time frames, you just see that big candle, but what happened inside the candle is a bunch of multiple candles that have multiple fluctuations.
Okay.
And so here it went up, it went down, it went up, it went down, it went up, it went down, it broke. Then this is Friday. Gap down, and now it's going up again. And so, again, the idea is to show you lower low. Right here, we can say, nope, it will be right here. Higher low. No, higher high. Higher low. Then higher high. This will be higher low. And now we might look at the higher high. Remember our two lines here?
Mm-hmm.
That's where we might have it. And then if price does what we are predicting, it's going to do this, and then it's going to drop, and it's going to bounce either here or here, which is here or here. And we go back to the number I gave you at the beginning, 2920 and 2920, or the 33 right here. And and then here it might do another range like it did this, until if we see then it drops, and then we have a lower low. Now we start looking for a lower high. Now we know we're shifting from going up to going down.
Okay.
But this is the fundamentals of trading. And as you can see, it's really not hard at all. And when you train your eyes to see this, this is why some traders don't use indicators or lines or none of that. Because really, at the end of the day, you just need to know this level, but you know this was a false breakout. But even if you trade this and you are a scalper, right here it went up, but it went down just a few ticks to bounce here. This was a very bad trade. I would not have taken, because you know it's going to bounce in the top of the box once it breaks again. Typically, the first attempt is a false one. The second attempt, it could be, which in this case was 1, 2, then 3, 4, 3, 4, 5, 6. This one broke, you know, and look what happened. And so if you see the first attempt, this one is a pretty high probability trade to short until this bottom, which is right here. And just to give you an idea how much money is that, or how many ticks, because you might be thinking, well, but why do that? Well, because the people that trade 10, 20 contracts, that's typically the type of moves that they look. The short day traders that are not looking for long moves, but they trade big, they look for movements like this, where they can put from here to here. Look at that, 71 ticks. Calculator real quick to give you an illustration. 71 ticks times 1250 each tick. Right here in 15 minutes, Actually, that will be 30 minutes and an hour and a half, one contract, $887. You have 3 contracts, you made $2,662 in maybe an hour. That's a very good hourly rate.
Oh,
And that's only 3 contracts. Now, 887, and if you are a whale, but you don't want to risk a lot all day long, and you have $887 times 20 contracts that you put in, you just made $17,000 in an hour right here. This tiny move.
oh, wow.
So if you trade like that, that's why I said, as you learn, you're going to find which kind of trader are you. Are you going to wait for moves like this? Or are you going to scalp big with move like this? You know, that's something you're going to determine as
you start trading. Because when I'm looking at it, I'm like, oh, it's not that much of a move. But then it is a lot depending on the number of contracts that you have.
Exactly. And actually, there are traders that all they look is for 3-4 ticks. That's it. But they put 30, 40 contracts. You know, 3-4 ticks. Those are several thousands of dollars in 2 minutes.
In 2 minutes.
So the beauty of this is that you can shape it and you can trade it whatever suits you. However you feel comfortable, your risk tolerance, you can shape it to trade it in such a way that you are comfortable with your style and with your type of tolerance.
Okay.
All right.
Cool.
Well, Dina, I think we accomplished a lot.
Yeah.
I hope I didn't. It's going to be downloading of information because it's a lot. And for as much as I try, we are going to be times that I'm going to go even with more stuff faster. But that's the beauty of recording it and saving it so you can come back later and then see it again when you miss a point or you don't remember something.
Okay. Awesome. That makes perfect sense.
Awesome. Well, Dina, good night. Thank you for being here. I will shoot you a text tomorrow to orchestrate the next session or session so we can put in a calendar and know what to expect, okay?
Okay. Awesome. Thank you so much. You have a good night.
You too.
All right.